Let's kick things off with the broader market. Stocks are selling off into the close, with the Nasdaq leading the way lower, currently down 2.4% now, right at the session lows, Mike, and S&P now down 1.4%. It's really picking up steam this half.
Yeah, and, the overall index can only, withstand so much. Again, the kind of broader tape is down about 0.25%, but really pronounced selling in those NASDAQ stocks. It obviously seems as if a lot of people agreed this is probably a year where there's going to be a lot more kind of push-pull between the sectors, a little bit of valuation compression going on in the overall market. People are kind of bracing ahead of somewhat tighter monetary policy, and that's the bumps along the way, I think, is what's spilling money out of things like the NASDAQ 100 today.
The technology index within the S&P 500, information technology, down 2.6%. We've only got utilities and staples higher right now. Steph, just remind us of your strategy around tech right now with some of these names. NVIDIA get down 5%. ServiceNow, I was wondering what that was, down 9%. I mean, some real big declines, and today is not the first day that this is happening.
Yeah, and I'm not surprised, Sarah, that the S&P is also taking a leg down, too, because technology and comm services, if you add them together, it's 38% of a weighting in the S&P 500. People are loaded to the gills with these things, especially after 4Q, when the top five, FAANG plus Microsoft plus a few others, really led the charge at the end of the year. So now you're seeing some unwinding because it's crowded. The valuations are really hard to support, even in FAANG. And by the way, I own FAANG, but I am 10 percentage points underweight if you add up tech and comm services, just because I think it's the prudent thing to do. That being said, I still own a big chunk of technology because I do like total addressable market stories. I do like semiconductors and the end markets that they serve. I also like some of the value tech, like enterprise spend recovery stories, too. So I think today is really all about inflation. Like, we've been talking about better growth as Omicron, we kind of get a handle on it. And that we know. And I thought Jamie Dimon did a great job this week. I thought Ed Bastian did a great job today in terms of consumer just fine and pent-up demand is on its way. So that we know on the growth side. We know the economy is doing OK. But with that comes higher inflation. And I know yesterday the CPI didn't meet the whisper numbers of 9%, but 7% year-over-year growth in CPI is a very big number. And today's PPI, a record at 9.8. And that number is going to go higher because energy prices have rebounded this year. So you want to own some reflation stories. You want to be diversified. But long duration assets that are over-owned are going to be difficult in the short term, I believe.
Steph, I wanted to get just a bit more of your thoughts on those mega cap tech names and when you might be tempted to buy them on this pullback. I saw a debate you had earlier in the week on CNBC, saying that you sold out of Alphabet because you believe you'll get a chance to buy it at a lower rate. Already vindicated on that. So congrats, given the pullback we've seen over the last couple of days. What sort of pullback do you want to see for you to think, great, that's enough, I'm going back in, because these are companies that are going to do well over the long term?
Yeah, I mean, I think first and foremost, one of the reasons I sold it is because it was up. This is Alphabet. It was up 65%. And I took that money and I did put it into Meta or Facebook. And that's down today, too. So that's not that. I don't feel really good about it. But I think the risk reward in FAANG in general is not that great. I only own two. I only own Apple and I only own Meta. The others I've sold out of because I think, A, they're very crowded. I think there's something like 98% sell-siders have a buy on Alphabet, 99% in Amazon. And I just don't like that risk-reward wealth. You know me. I try to buy low. I try to buy contrarian. I try to buy where stocks and valuations I believe are reasonable. I don't think Apple and Amazon and Facebook, for that matter, I don't think any of them are expensive. I just think they're over-owned. And so you're going to sell these first and just try to stem your losses if you are overweight in all of these. And as I say, comm services and tech, it's a big, big weighting. So I think we could see an unwind for a bit. If they fall 10, 15, 20%, of course I would take a look, but we'll have to wait and see.